crypto winter? What crypto winter? I'm in a Hawaiian fucking shirt. No, I'm joking. It's just boiling in England. So let's get into what's happening today because the Fed are meeting. And here's the expectations. But before I do, I update the spreadsheet. The first 26 coins I spoke about on the channel. Had you invested $100 into each of these when I release videos about them and you're still holding all that crypto, we're in profit for around 8.5K. Obviously, after 1,000 retracements in the bear cycle that we're currently in, that could go very, very deep based on what Bitcoin's doing at this moment in time. If you want to see the coins that I'm buying up during the bear cycle, then come check out Copy My Cryptos, where I share every coin I buy and sell. I've created a couple new bags of cryptos recently. I've got a couple buy orders in right now for a new crypto and strengthening position in one. And if you want to see exactly what they are, those cryptos that I think will make substantial gains in the next bull cycle, then all you have to do is click the link in the description and check it out. Right, FOMC. I know it's not sexy, but it is important. So, first of all, what the hell? I hate these sites. So, Bitcoin, first of all, hovering at 20K right now. 20K. So, things are looking concerning in the short term. But, again, when the prices are down, everyone's heard the phrase buy low, sell high. And Bitcoin right now at 20K is not bad, but there's definitely deeper dives that can happen, and I wouldn't be surprised if Bitcoin breaches 20K and drops below it. But there's definitely a really strong psychological barrier for 20K, so there'll be a lot of buyers at 20K. There'll be a lot of sellers that'll push the price down. Now, the FOMC meet today. They're looking at trying to strengthen the economy and get inflation under control. So obviously the CPI increased 8.6% in May. This is the highest figure in the last 4 decades. And bear in mind the Fed's tolerance limit is 2%, so it's more than 4 times. So the Fed are looking at revising a few things. So the first thing that there is an expectation is that the Fed are going to increase interest rates by 75 basis points, which is a big move. But this is one where the market would react pretty well to. Like 75 basis points shows that they are trying to get control of what's happening. That wouldn't be the worst thing. Bill Ackman repeated this. So the Federal Reserve has allowed inflation to get out of control. Equity and credit markets have therefore lost confidence in the Fed. Market confidence can be restored if the Fed takes aggressive action with 75 basis points tomorrow. Obviously, you tweeted that yesterday. And in July, and a commitment. Now, I agree that I think the market would react pretty positively if they were to actually increase the interest rates higher. But the bigger concern for me in terms of how markets would react would be their approach to tapering. At the moment, tapering is 95 billion a month. If that number rises, that's definitely gonna have a negative impact on the overall markets. And I think that would have a bigger negative impact on the markets in terms of prices than a 75 basis points hike would have in terms of positivity. So it's going to be a really interesting event today. I always say this, but one of the best things you can do during the Fed press conference is watch the minute-by-minute charts for Bitcoin or the S&P 500 on the NASDAQ, because it's so apparent what traders and investors are feeling based on what is being said in that meeting. It really does give you an insight into the market sentiment as things are being said. And then it allows you to highlight, okay, when this was said, all of a sudden we saw a 2% drop in prices. So this statement by Jerome Powell here has had a really negative impact on the overall market, and vice versa. It's a very, very interesting event. So there's been a few people talking about this, and the former Federal Reserve Chair said the US economy today is a mixed bag. A recession is possible. Economists are very bad at predicting recessions, but I think the Fed has a decent chance, a reasonable chance of what Jay Powell calls a softish landing. It was inevitable this inflation was not transitory. It was inevitable the Fed would have to move faster than they were projecting. There was a legitimate recession risk. I used to think it was about 30%. It's probably more like 50% now. It's not 100%. It behooves you to be a little cautious. That's James Gorman, the CEO of Morgan Stanley. And Leon Cooperman, who's a chairman of Omega Advisors, has said that there hasn't been a recession since 2008. We are overdue. However, it may not happen this year. We've had a very, very toxic combination of fiscal, monetary policies. I think it'll be this year. I think recession is this year. I said it 7 months ago, and I stand by it. So, like the easiest example is the Dow Jones Industrial Average. It peaked on the 4th of January. It takes approximately 6 months for a recession after that, for a significant bear cycle. And the stock market has been confirmed in a bear cycle. Quite clearly, crypto is in a bear cycle. But with the cost of living crisis, with the rising cost in petrol, the rising cost in fuel, the rising cost in electricity, gas, the recession's basically hit. As much as people don't, as much as the experts don't want to say it, we're there. The question is how quick can they recover? When are we going to experience a bottom? Because let's be clear, the last couple of years, or the last couple of bull cycles, we've basically watched around about an 85% drop in terms of the price of Bitcoin. Now, Bitcoin was at 69K. So 69, and we'll get rid of 85%. 10,350. That's where it can go based on previous history. Now, here's the distinction. The last 2 bull cycles, there was not economic strife. So I'm not sitting here trying to predict the bottom, because I think that's a fool's sort of errand. But don't be surprised if actually the decline is deeper than an 85%, because we're actually in a situation where most people are struggling day by day because of the cost of living, because of it compared to their salaries. This will be the first sort of bear cycle crypto's experienced that's also coincided with a recession. So 85% might not be the depth. It might be 90%. And look, you can't predict the bottom. It's never worth trying to predict the bottom. 1 in a million, 1 in 5 million people will catch the bottom, and they won't have just gone all in at the bottom. So when the markets are in decline, if you've found the cryptos that you love, dollar cost averaging in makes sense. Always keeping money on the side. This is always something I talk about, but keeping money on the side, because you don't just throw all your money in when you go, oh, that's a nice price. Because if the market continues a decline, if you've got money on the side, you can use that at different price points. And it's just worth doing. It's just sensible in terms of behavior. But let's throw it out there. What do you guys think will be the bottom? Because let's say historically 85%, so 10,350. How low do you think Bitcoin can go? Because obviously, however low Bitcoin goes, you can extrapolate how low your favorite altcoins could go. It's an interesting question. So let me know what you think. What do you think the bottom ish will be, presuming there isn't like another black swan event. Yeah, let me know in the comments down below. Like the video, subscribe to the channel, hit that bell notification. And if you want to see the coins that I'm buying up, that I'm starting to DC dollar cost average into, the purchases that I've made in the last week, the purchases that I'm going to continue to make over the course of this bear cycle, then all you have to do, folks, is click the link in the description and check it out. And that's it from me. Take it easy, folks. Bye-bye.